Hey everybody, hope you're doing fantastic. Today we're going to cover the Qs or the NASDAQ 100 for the March 1st. What's going to happen, who's announcing, what are the estimates, and what's going to occur in the future. So let's just jump into this. So what's the net? Prep2Grow's predicted that starting on February 15th, that there was going to be at least a 5% pullback, and it happened. February 26th, or excuse me, in the week of February 22nd, it pulled back about 6.5, 7% during the week. Had a nice recovery on Friday, but it hit our expected 5% pullback for sure. Historically, the week after a pullback like that, it's a little volatile, maybe a small pullback again. Not much, but it's going to be pretty flat. Hopefully, for the option traders, you played what we projected. It's our recommendation based off our big data and AI platform. Again, it's a recommendation, but we projected a pullback. We played options on it. It was great for us. Hopefully others played it as well. But this week it's going to be flat. Bad time to buy in as an option trader. Good time to get in as a stock player. Stocks are great for Qs, especially with a quick bounce up. We project that the following week, the March 8th, is when they'll start to recover a bit. It's a lot of signs for recovery. FANG is back growing, hockey stick like. The pullback was great because it matched growth projections and it's not going into an overly inflated bubble. There are some negatives. Unemployment's still not great. Had some good numbers this week, but still, it's a risk factor in terms of the longer term recovery for the general market. So let's just talk growth for the last year. The hockey stick number going into March is great for us, especially with the pullback. Good signs, full recovery, mostly for the Qs and the NASDAQ 100. Growth rate is 40% higher than last year at this time, so good stuff. The analysts aren't quite raising as high as I would expect in terms of the projections, but we'll see what happens. Q1 should be great for most of these folks in terms of their announcement. Some of them are a little bit behind. They're announcing their Q4. Some companies announce in the January timeframe. More of the volatile sectors that don't like to do announcements during their Q4 during the Christmas season, especially those that play in the chip space, like in this case Marvell, Broadcom, or Cisco. Those guys they announce a little bit differently on their timings. So about 2.75% of the total Qs holding is announcing this week. These are the biggies. Probably the biggest out of this is Zoom. So we'll cover the ones that we aren't going to go into great detail within our Prep2Grow application, where we'll talk pricing estimates, is it going to go up or down, unusual option activity, etc. So let's touch on Ross Stores quickly. They're announcing the year end in Q4. They've obviously been hit hard in COVID times. They've grown about 10% from July. Analysts have very high expectations for Ross's turnaround. They were negative growth in July for projections. Now they're 150% higher than that. We don't see it. The data doesn't support it. Our data doesn't support it, I should say. They'll eventually recover, just not this soon. So we expect that their announcements to be a bit bumpy with not so rosy forward-looking projections. Let's talk about Marvell. Announcing Q4 and fiscal year end. We've been tracking Marvell since 2013. Actually, we're going to cover them in the application, but let's talk Broadcom instead. Tracking them from 2013 as well. Announcing Q1 results. They're actually in a very similar space to Marvell, but unlike Marvell, Broadcom is really growing and recovering well. They started the recovery and spike growth in October of 2020. Future looks good. Again, announced in Q1. So whether chip manufacturers usually have a longer lead cycle in terms of growth impacting sales and revenues and whatnot. So you should expect that they'll probably have a pretty good Q1, but their forward-looking projections should be really good based on their current growth. Prep2Go doesn't support playing earnings. We don't do it. It's such a coin flip. It's so risky. Way more risky than options is playing earnings, just because some CFO or some C-level could say something weird and the analyst cannot like it and tank the stock. So be highly cautious playing earnings. It's very difficult to get it right. But let's jump into fine grained details on Marvell and Zoom. So this is the Prep to Grow application called Grow. It's our big data AI stock recommendation and screener platform. We're expanding the capabilities over the next month. We're going to start getting into portfolio analysis and portfolio management and some more interesting things with real-time transactions of buying and selling via your broker of choice from this application. So we're excited about that stuff. But if you're in the application and you want to see who's announcing in any ETF or sector, you just go into your screen or filter. You go down to saying, okay, I want to see everybody that's announcing in the technology sector. Maybe I want to get more fine-grained to talk about SPY or QQQ or FANG Plus. And then I just say, show me all the earnings. Hit that, boom. You get your earnings as it comes in. Or if you want to be alerted to it, you just hit save. And this will send you text and email alerts when one new company gets added to an earnings announcements coming within the next 3 weeks. So it's a great little tool for knowing when announcements are coming and what are the projections for that earnings. So let's jump into Marvell in Zoom. Oracle's coming in the next week. We'll talk lightly on them just because they have a lot of unusual option activity. But let's get into Marvell. We've been tracking Marvell since 2013, like I said, announcing their Q4 and year end on March 3rd. I personally like Marvell. I know people that work at Marvell, very smart, dedicated people. I think they're another Bay Area company. And Marvell by far has the best corporate headquarters lobby. The most beautiful, best I've ever seen in the valley. They got the fish tanks, they got the wide open space, they got the marble. It's really, really quite amazing. But they're struggling. Unlike the graphic chip cards in the industry like NVIDIA or AMD, they're the not so sexy networking space and networking chips, analog DSPs, that kind of stuff. Analog devices play into this. Broadcom plays into this. They've done well, certainly, but they've had a very bumpy fiscal year. Expect that it should play out in their announcements. While they've recovered a bit in terms of their growth rates, and this is a company that really manages their finances very closely. So they're growing a little bit. Their forward-looking projections probably won't be as aggressive as rosy as Broadcom, but they are starting to recover. We are projecting that because of the year end and the bumpy road that they're going to be a put. It's a 75% accuracy. This is good for directional, not great for actually buying an option. Prep to Grow wouldn't buy an option at the success rate. It's just too risky. But we are expecting directionally that Marvell will pull back at least 4%, maybe 5%. There's been some unusual option activity on their August 20th, 2021 expiration at the 49 strike price. So just know there's unusual option activity there. This is a recommendation actually for Monday, March 1st. We think their moving averages are on the higher side. They had a good bump on Monday with the rest of the market. But we're hopeful that Marvell's a good company, that they'll have some decent forward-looking projections, but they have struggled heavily through their fiscal year. So just be aware of that. The next is Zoom. I'm not a huge fan of Zoom. I like GoToMeeting or Google Meets. This is a good one. Directionally, this is a great stock. So we like stocks. We rarely ever miss on stocks that have a greater than 85% accuracy. Sorry about that. So we think Zoom is directionally going to go up. Been tracking them for a while. Zoom, the postal child for growth for the last year. They're announcing their Q4 and fiscal year end results on March 1st. They've had great growth, continue to have great growth. These guys are a good example of what not to say during earnings announcements. They got punished in the last earnings that really dropped their stock. So just be aware that they don't really have the greatest communication within the earning announcement that typically impact their stock price. Again, earnings is a flip, so be cautious. It's a caution just because the stock price went up so much on Monday, but we think these guys are continue to grow to 383, which is about 5% stock price. So it's a perfect time to get in for these guys. Again, it's a recommendation. Zoom, their growth is outpacing their stock price, which we love to see. So Zoom is a great option for this. We'll touch on just Oracle for a quick sec. They're actually announcing on the 10th. This is good directional guidance on them. They're doing the TikTok deal. I'm sure that was just a marketing play, knowing Oracle as well as I do. We're expecting them to pull back 10%. They don't have a lot going on. Unusual option activity on the September 17th, 2021 strike at the 62.50 strike price. It's 4x the usual volume for this. So it's a pullback for a company that's announcing on the 10th. Let's jump back into earnings and growth and why we were projecting this bear. So just some more fine-grained details. So this is the yearly forecast on revenue for the Qs. Again, we separate in the NASDAQ-100. Again, we separate FANG Plus from others. Flat, to a little bit of a decline from December and going to Q1, which we don't like to see. We see growth a whole for the Qs and NASDAQ-100 as really good, again, led by mostly the FANG Pluses. So just be aware, non-FANGs like a Marvell or a Broadcom or Ross stores, very limited impact on the NASDAQ-100 or the Q, so just be aware. And so, again, some hockey stick, we think their forecast, the analyst forecasts, are lower than our growth projections, and we expect that they'll bump up soon as well. As we look at stock volume, again, always surprised by the stock volume, especially for the FANGs, lower than last year this time. Hasn't really hurt much. Maybe it was just because people were also projecting the pullback, so they weren't buying into it, but a lot less than we would expect. Less, not quite less than last year, but it's pretty flat. 30-day predicted stock price. Again, we had the pullback. Generally, again, we separate from FANG to other. We started to project it to go back up towards the end of the month, and it did. But predicted stock price, we're looking to bounce back again. 30-day predicted long option volume. Calls are back up. Calls are back in the mix. So good about that. Happy about the calls. We certainly support that. So we're predicting long option volume to go back up. Some more look like people are playing barbells, equal calls and puts, but calls spiking back up is a change over the last 2 weeks. So that's good. We support our algorithm, support that change as well. Bear versus bull. So these are our predictions. Again, bulls are going down. You can see by the green number in terms of put projections, and our calls and stocks are going up. So we project that the market's going to continue to grow for the Qs and the NASDAQ-100 within the next 2 to 3 weeks. And that there's a lot of goodness around the growth. Growth projections are now exceeding stock price, which is what you'd like to see in terms of buying into the Qs or the NASDAQ-100. Again, this week, we expect it to be flat to a small bear. Historically, that typically occurs after this kind of pullback. But Qs, growth-wise, and NASDAQ-100, hockey stick, looking great. Full recover. Should be good things happening in the next couple weeks to months. I hope you like this content. Please like or subscribe. Any questions, always hit us up on our site, prep2grow.com. Thank you for your time, and happy trading.